At one point, it seemed like everybody loved dividend investing. It's free money, it's passive income, you don't have to work for it. And while, yes, it is passive income, you're not technically working for it, there's a huge opportunity cost that I think a lot of investors aren't seeing. That's something that I've definitely realized over the last year as an investor. And that's why I've kind of strayed away from the traditional dividend investing approach. Today's video is not saying that dividend investing is a scam or that dividend investing is wrong. It's really person to person. But today's video is also to give you a different perspective that I wish I had seen maybe a year or two ago, and maybe a different mindset when it comes to picking your individual stocks if that's what you're doing. This video is also going to be a bit of a glimpse of some of the personal things that I've been really developing recently as an investor, more specifically probably the last 3 months. And if you're subscribed to my live show, The Cashflow Kings, you would have seen this unraveling and you would have seen my personal development. Alright, let's get into the video though.
Hello, I like money.
So I feel like a complete atheist every time I say this, which there's nothing wrong with, by the way. Whenever I say like dividends aren't free money, the day that I stopped looking at dividends are free money was probably one of the biggest days in my investing journey that changed for the better. I love to make this analogy, especially when it talks about yield max and all those other income ETF funds that are targeted for stupid and poor people, respectfully. So I definitely do understand the argument that a lot of people have that they don't want to automatically sell out of their company. And I think that's one of the biggest benefits of, having dividend stocks is that you don't have to sell the stake in your company and that whole kind of passive income aspect to it. But for younger people, or maybe people even in their 30s, higher 40s who look like they're in their 60s that are buying these kind of funds, I would like to make this argument and this kind of analogy that may change your mind on things and that's kind of resonated well with me personally. Alright, you get $100. You invest it in stock A or stock B. Stock A, it says it has a 10 or 20% yield on it and you get your little passive income dividend. But at the end of the day, your only return on capital is like $120 at the end of the day when you get that dividend. And we'll be generous. We'll be very generous, and assuming this is an actual business and not some sort of covered call ETF as well, which one could make the argument, you could do it yourself, save a percent or two on commission, save a bunch of money. Or would you rather invest in stock B and get a much better total return with $200? Assuming you're not barely living off of Social Security right now or need the money every single month, quarter, or whatever, I would probably choose stock B. And yes, I totally understand the inconvenience of not wanting to time the market and automatically sell out of the company and the stake, because anything can happen with the stock price. I understand that argument 100%. But if I walked up to you right now and I said, give me $100 and I'll give you back 120 or 200, and the only difference that I'm making is that you're paid differently with the 120. It just looks different of how you get your wealth over time. You're still getting the wealth, don't get me wrong. Here's another amazing graphic from Travis Gatlizer on Twitter. A dividend isn't just free money that Casper the Ghost gave to the company overnight. You can also look at selling covered calls and options as well if you really want that passive income aspect of it. But a lot of people don't like to do that because it requires a little bit of work and some research. And believe it or not, guys, a lot of investors don't want to do that. You'll see that with some of their stock decisions and picks. But the day that I stopped looking at companies in order of their dividend yield or what kind of potential passive income they could offer me in the future, and I started looking at more of a total return basis and the long-term dividend growth, because obviously, as I say on this channel, dividends are the result of a company's free cash flow, execution, and every other thing you want in a great business. You may be holding on to a company right now, like Nextera Energy for me perhaps, or maybe 3M, that's honestly just a bad business and you're holding on to it only for the dividend. And once you stop looking at dividends as free money, you kind of realize that you're just sitting your money in that really bad company and you can really just upgrade your portfolio quality wise. That's what I've been doing recently. I sold out of some of Nextera Energy and I completely sold out of my 3M. I'm not saying that they're bad businesses, but compared to some of my S tier companies and core holdings that I'm really building up, they aren't anything really great. Dividends are a giant trap for long-term underperformance. When you're chasing that dividend, you're just sacrificing total return and capital appreciation at the end of the day. Now, with that said, though, I think there are some advantages to owning dividend-paying companies, but I think, honestly, companies that pay dividends is just the result of a really good business. Not every company that you own has to pay a dividend as well. There's lots of small caps that don't pay dividends, lots of big upside. This is a graphic from Faster Capital, and it touches on some of the key things that I really do enjoy about some of these dividend-paying companies. So the way that I view dividends these days is really just an aid to my long-term total return, and maybe a potential passive income stream down the line, way down the line, though. I'm talking like 15, 20 years. When you continually reinvest your dividends, preferably in some really high growth, some quality companies, especially if they do grow that dividend as well over time, the dividend snowball effect can kind of take place, and if you are looking to live off of that income at some point, it's definitely a viable option. but your total return is also going to gain along with that, which I really do like. Also, if you own actual businesses, not like shitty yield max funds, your dividends will be taxed at long-term capital gains rate, essentially just more favorable tax rates for your dividends that are taxed. Obviously, REITs and MLPs do not count. We also saw in 2022, when we were in our last bear market, of how favored dividend stocks and more stable plays really were. They were outperforming the market, and a lot of people did not like that. Right now, and especially when a time when the S&P 500 is hitting an all-time high every other day, Nvidia is absolutely on crack. It's very easy to nitpick performance, especially with some more stable dividend stocks. And also, you can naturally kind of average down over time if some of the individual companies that you do own inevitably go down. Dividends and reinvesting them are a great way to naturally average down. It isn't free money, but you can average down. An example, this is like Starbucks. I just got like $20 from Starbucks last week, averaged down and got a better price. And it's been proven that reinvesting your dividends in some quality companies over a long-term time horizon will significantly compound your gains. But a lot of people won't compound their dividends long enough or hold on to the individual stocks because it goes down and that will never be able to see that compounding effect. Alright, so now that I introduced you to the dark side and maybe potentially looking at total return instead of dividends, a few key things: just don't view them as free money, that's all I ask. Just buy really quality companies at the end of the day and you will be fine. Or even better yet, just buy VOO or SPY. Alright, thank you guys for watching. Once again, smash the like button, subscribe, check out the Cash Flow Kings, link in the description, and of course, do dividend stocks, hot drugs. Have a good one.